Hey guys, Richard Seal, coming from my temporary office in Pleasant Grove. I was just looking at the markets today, and if you look at the Dow, today is the 11th of March, and the Dow is down about 10% from January 1st so far. And that's normally not like a really fun thing to talk about, that whenever markets have a decline, there are a certain number of things, I'm going to call it 5 things, that you need to do or should think about during that decline. The first thing is that when the market declines, you have basically your high and then basically where you bottom out. During this period of time, one of the things you can do is called loss harvesting. That is where if you have a stock or a security that is actually at a loss, you can go ahead and take advantage of that and sell that security and create a loss for your taxes. And then there are some rules that we need to follow in order to reinvest appropriately, but you can make that loss happen, go back into the market and recover, but you have a loss to carry on to this year's taxes. So one way to make some lemonade out of lemons. The second thing to consider is that if you're doing a Roth conversions, now may be the time. Because if you have a portfolio that was valued higher and all of a sudden it's 10% lower, if we convert while it's low and then it grows back as a Roth IRA, all of that growth is going to be tax-free. So you'd be paying tax on a lower amount and you get the growth back on a tax-free basis. Another thing is to look at rebalancing the portfolio. As the markets drop, the percentages in your portfolio of small cap to large cap, foreign, all those things, they may be out of balance, and it may be time to go ahead and rebalance the portfolio, level it out, and make sure it's poised in the best possible position for the rally when the market comes back. Another thing, think about being ready to buy the dip. If there's cash positions, maybe we're waiting to invest, instead of being frozen, the best thing to do is be looking for opportunities for stocks or securities that may be on sale or in a good position to buy. But always keep in mind the best thing to do throughout this whole cycle of a market decline is to stick to the plan, stay disciplined. The one thing that we don't want to do is sell off without a plan behind it out of fear, because we don't want to miss this rebound when it happens. So anyway, just a couple things to think about. If you have any questions about how these 5 things might apply to you and your portfolio, as always, give me a call. Let's sit down and see which one of those might make sense for you.